One of Plus Malaysia's potential suitors, Widad Business Group, has revised its offer to take over the toll operator in a presentation to the Works Ministry yesterday, Bernama reports. In a statement, WBG said it is proposing to acquire 100% equity in Plus for 5.3 billion ringgit cash. This is in addition to the compensation waiver of 3.04 billion and debt assumption of 30 billion ringgit. This brings the total enterprise value of the offer to 38.3 billion, which makes it the current highest bid from the private sector. The revised offer also contains two additional clauses, namely waiver of the 11 billion ringgit sukuk guarantee by the government and a new option for the government to buy back Plus after 10 years based on market valuation. Group Executive Chairman Tan Sri Muhammad Iqmal Opat Abdullah said that WBG had taken in PM Tun Dr. Mahathir Mohamad's comments about not finding an attractive enough offer for Plus, which resulted in the upgraded offer. In its proposal, WBG had also listed a few commitments for the Plus takeover, such as for toll rates. It proposed two different mechanisms, either a 25 to 40% reduction passed on to road users via direct toll discounts, or a toll reduction of 18% direct to road users, and the balance of 7 to 22% reduction to be channeled to the government for the welfare of targeted groups. Senior Fellow for Think Tank Ideas, Dr. Edmund Terence Gomez says that PM Tun Dr. Mahathir Mohamad is still de facto finance minister despite not officially holding the portfolio. Gomez explains that Mahathir still has consolidated control over key statutory bodies and ministries. He points out that control over Khazanah Nasional and PNB has been moved to the Prime Minister's department from the Ministry of Finance previously. Gomez says that the MOF had been dismembered and its roles reduced in favour of the PM's department, Ministry of Entrepreneur Development, Ministry of Rural Development and Ministry of Economic Affairs. He points out that notably these ministries, which control key GLCs and statutory bodies, are led by people from his own Parti Bersatu and political allies. In order to remedy this, Gomez says that the word GLC needs to be reconstructed, work needs to be done to distinguish between good and bad GLCs, and transparent guidelines and measures must be established. Lotte Chemical Titan Holdings said its US-based JV Lotte Chemical USA will transfer at least 34.79% of its equity interest in LACC for $816.47 million to Eagle US 2. In a boss filing, Lotte said LC USA has inked a security purchase agreement with Eagle US 2. The transfer is arising from Eagle US exercising its call option, which allows it to increase its equity interest in LACC to 50%. LACC is a JV between LC USA and Eagle US for the development of the US ethane cracker plant. Of the total purchase price, 25% will be used to pay off the syndicated term loan facility obtained by LC USA to fund the US shale gas project, while the remainder will go towards new business plans in the US, such as plant expansion. Lotte says that the transfer is expected to generate a one-off gain on disposal that would have a material impact on the group's financial statements. To recap, LC USA is a 40-60 JV between Lotte and parent Lotte Chemical Corp and operates a large-scale petrochemical facility located in Lake Charles, Louisiana. Mudajaya Group saw a spike of interest today as its shares rose to a 6-month high of 35 cents, driven by chatter of a possible corporate exercise. However, the stock wasn't able to hold on to that high, closing the day at 34 cents, but this was still 61.9% higher than the previous day's close. Volume during the course of the day ballooned to a whopping 71.13 million shares, far above its 200-day average of 455,154 shares. A Mudajaya spokesman contacted by theedgemarkets.com said that investors are possibly waiting on an announcement that might be released later this week. The company is currently in the red, having posted a net loss of 31.6 million ringgit in the second quarter of FY19. PNB Group Chairman Tan Sri Dr. Zeti Akhtar Aziz says that GLCs and GLICs must be conscious of their role in the economy, as well as the need to evaluate their priorities in order to drive and achieve sustainable growth. She adds that the corporate sector has a key role in achieving this agenda and needs to be well positioned to rise up to and face these complex challenges. She was speaking at the inaugural PNB Corporate Summit, which had the theme Rebooting Corporate Malaysia. Zeti says that the economic and financial landscape is dramatically changing, whereby geopolitical and social developments now have economic and financial implications against a backdrop of rapid technological advancement. Commenting on the global outlook, Zeti says that while there has been some moderation in global growth, on the bright side, conditions are expected to improve next year, as evident by the recovery in several emerging markets and economies.